Welcome to the deep dive. Today, we're diving right into the shipping industry. I mean, a sector that's just famous for being incredibly volatile.
Oh, absolutely. Wild swings, but also huge potential fortunes, right?
Exactly. And that's the question, isn't it? How do you actually take a company that's, well, almost collapsing and turn it into this massive success?
Yeah, that's precisely what we're tackling. We're focusing on the investor John Fredriksen, who's, legendary in these circles, and his big strategic commitment really to Golden Ocean Group, a major dry bulk shipping company.
Okay, so we're going to unpack that. Look at the strategy, the market, maybe those gutsy contrarian calls he made.
That's the plan. We want to understand how he managed that incredible 4.6x increase on his stake. There are definitely lessons in there, I think, for anyone interested in market cycles.
Right, and strategic investing in general.
hmm
So before we get into Fredriksen's moves, maybe just quickly paint a picture of Goldie Ocean itself. What exactly do they do?
Sure. So Golden Ocean, they're a big player in dry bulk shipping. They basically move essential stuff around the world, iron ore, coal, grain, mostly using these really large carriers, Capesize and Panamax vessels.
Okay, so their fortunes are pretty tied to global demand for those basic commodities, especially places like China and India.
Very much so, yeah. If those economies are humming, building infrastructure, needing materials, Golden Ocean tends to do well. It's quite a direct link.
Got it. Okay, so now let's rewind. To really get Fredriksen's play, we need to understand the context back in, what, 2015, 2016? What was happening then? It sounds pretty grim.
Grim is putting it mildly. It was a historically bad time for dry bulk. Yeah. The Baltic Dry Index, that's kind of the main benchmark for shipping rates, it just cratered, fell to record lows.
Why? What caused that collapse?
Fundamentally, a massive oversupply of ships. Just way too many vessels chasing too little cargo. A total glut. Companies were, frankly, bleeding cash.
And Golden Ocean wasn't immune. They were caught up in this too.
Oh, definitely. They were in serious trouble. We're not just talking a bad quarter. They actually had to go through a major restructuring in 2016. They were really close to the edge.
Wow. Okay. And this is where Fredriksen steps in.
This is the first key moment, yes. His investment firm, Hyman Holding, came in with a crucial injection of new equity, basically recapitalizing the company when few others would.
So putting money in when things looked bleakest.
Exactly. And not just that. Golden Ocean itself, likely with his backing, started doing something interesting. They began buying ships.
Buying ships in that market.
Yeah, from other companies that were even more distressed, picking up assets on the cheap. Like, they bought 14 ships from Quintana in 2017. It was about grabbing opportunities while others were forced sellers.
Okay, so fast forward a bit to 2019. Golden Ocean is stabilized, you said. Not exactly booming. Rates are okay-ish, but they survived.
Right, they were on more solid footing. And Fredriksen, through Hyman, already had a pretty significant stake because of that earlier rescue.
So a lot of people might have just held steady there, maybe waited to see what happened next. But Fredriksen.
Well, this is where you really see his contrarian streak, I think. He didn't just hold, he actively increased his stake.
Really? Even after the rescue?
Yeah. So in 2019, he had around 50.6 million shares, worth maybe $250-odd million back then. But over the next few years, he kept adding. By 2024, he was up to over 79 million shares.
Wow, that's a huge increase, like over 50% more shares.
Exactly, a 56% increase. It's a classic move, isn't it? Doubling down when the market isn't fully convinced yet.
And then came 2020. COVID hits. That must have thrown another wrench in the works for shipping demand, at least temporarily.
It absolutely did. Dry bulk demand took a hit, and Golden Ocean's stock price reflected that. It dropped pretty sharply, trading down in the $2 to $3 range for a while.
Which must have looked scary.
For some, yes. But you have to think, for someone like Fredriksen with a long-term view and deep pockets, that was probably seen as a golden opportunity.
To buy even more, you mean, at those low prices.
It's highly likely, yeah. We don't always see every single trade, but it fits the pattern perfectly. Using that period of maximum pessimism to accumulate more shares cheaply, really leaning into his conviction.
And wasn't there also an equity raise around that time? Did Golden Ocean sell new shares?
They did, yes. In early 2021, they raised capital specifically to buy more vessels.
Ah, okay. And would Fredriksen's firm have participated in that? Put more money in?
Almost certainly. To avoid getting diluted at the very least and likely to increase his position further, it shows that continued commitment, right? Not just buying on the open market, but actively supporting the company's growth strategy with fresh capital.
Okay, so he navigated the storm, doubled down during the COVID dip, participated in equity raises. what happened next? Did the market finally turn?
It sure did. Things had already started picking up a bit in late 2019, but 2021 was when it really took off. The market accelerated sharply.
Right, this was the payoff phase.
Exactly.
Yeah.
All those bets started to look very, very smart.
What was driving that big surge in demand?
A confluence of factors, really. A huge one was China. Their infrastructure spending, their industrial activity rebounding after initial COVID lockdowns. They import massive amounts of iron ore and coal, so that was key.
Okay, China's demand. What else?
Well, you also had general commodity restocking happening globally. Businesses rebuilding inventories after the disruptions. Plus, the global grain trade was strong. Just a lot more stuff needing to be moved around.
And what about the supply side? The ships themselves, were there lots of new ones hitting the water?
Ah, that's the other crucial part of the equation. No, there weren't. Because of that horrible slump from 2015-16, very few companies had ordered new ships. Nobody wanted to build into a dead market.
Makes sense.
And then you had new environmental rules coming in, like IMO 2020 fuel regulations. That added uncertainty and cost, discouraging companies from ordering new vessels even as the market started to recover.
So strong demand meeting constrained supply.
The perfect recipe for rates to go through the roof.
And they did. How high are we talking?
Oh yeah, the Baltic Dry Index. Remember that benchmark? It averaged around 3,350 in 2019. At its peak in 2021, it went over 3,300.
Wow, more than doubled.
Easily. And for specific ship types, it was even more dramatic. Those big Cape-sized vessels, they were maybe getting less than $10,000 a day back in 2016. In 2021, they were sometimes earning over $40,000 a day.
40,000 a day. That's incredible operating leverage.
Exactly. When rates jump like that, the extra revenue flows straight down to the bottom line. It shows how quickly things can turn in these cyclical industries if you're positioned right.
And Golden Ocean, with Fredriksen having built up that big stake and the company having bought ships, they must have reaped the rewards.
Massively. Their financials just exploded. I mean,
Yeah.
in the fourth quarter of 2021 alone, their net profit was over $200 million, a record for them.
Wow.
And that flood of cash allowed them to do two things: pay down debt rapidly, strengthening the balance sheet, and pay out very generous dividends to shareholders.
Dividends, too. How much are we talking?
Over 2021 and 2022 combined, the cumulative dividends were more than $1.50 per share. Significant cash returns on top of the share price appreciation.
So it wasn't just about timing the market cycle. Golden Ocean was actively managing its fleet, too, right, under Fredriksen's influence.
Absolutely. They were very proactive. They got rid of older, less efficient ships. That makes sense. But crucially, during the downturn, they invested heavily in modern, fuel-efficient vessels, these eco-designs, often buying them at bargain prices from struggling shipyards.
Buying assets cheaply again.
Right, assets that would command premium rates when the market turned. And they also invested in technology, like installing exhaust gas scrubbers on many vessels.
Scrubbers, what do they do?
They essentially clean the ship's exhaust, allowing them to keep using cheaper, higher sulfur fuel, while still meeting those stricter IMO 2020 environmental rules.
Ah, so lower fuel costs, another competitive edge.
Exactly. So premium rates because of modern ships, lower fuel costs because of scrubbers. It all added up when the market boomed.
And didn't they make another big fleet acquisition in 2021?
Yes, that was a major move. They bought 18 bulk carriers. Some from related parties, Toro and Hyman itself, actually. It was partly funded by that equity raise we mentioned, the $338 million one that Fredriksen participated in.
And that increased their fleet size by quite a bit.
By about 20% in one go. It really cemented Golden Ocean as one of the absolute top players, one of the largest listed dry bulk owners in the U.S., using the strong market to consolidate.
So the overall strategy seems crystal clear in hindsight.
Yeah, you could sum it up as scale up at the bottom to ride the wave up, build a bigger, better, younger fleet when assets are cheap, position yourself with maximum operating leverage, and then just reap the rewards when the cycle inevitably turns positive. Textbook, really.
Yeah.
Hard to pull off.
Okay, so they rode that wave magnificently. But in cyclical industries, the wave eventually crests. Knowing when to get off is just as important, right? How did Fredriksen handle the exit?
His timing was, again, pretty remarkable. By late 2022, the market started to cool off a bit. China's economy wasn't firing on all cylinders. Global inflation was biting. Things moderated.
And Golden Ocean's stock price came off its peak.
It did. It pulled back. And Fredriksen, or rather Hyman Holding, clearly read the tea leaves and recognized the cycle was likely past its peak.
So what was the move?
The announcement came in March 2025. Hyman Holding agreed to sell its entire stake in Golden Ocean. All 79.1 million shares
A whole lot. To whom?
to a company called CMB Tech, and the price tag was impressive,
How much?
about $1.2 billion
Yeah.
in cash.
Wow. And was that a good price relative to where the stock was trading?
A very good price. It worked out to $14.49 per share. That was a 44% premium over the market price at the
A
time.
44% premium. That's huge.
It is. And it was also about 1.3 times the company's estimated net asset value. So a strong valuation by multiple metrics.
So that sale effectively locked in that massive 4.6x gain we talked about at the start.
Pretty much, yeah. It crystallized the profit. Avoided the risk of holding on too long and watching the gains evaporate as the cycle turned down again. If you look at the annualized return, it's something like 35% per year from mid-2019 to early 2024 on the share value alone.
Just incredible discipline. And as you said, the actual total return was even higher because of those dividends along the way.
Absolutely. Those dividend payments, especially in 2021 and 2022, were a significant kicker on top of the capital gain. You have to factor those in for the full picture.
Okay, so let's distill this. For you, the listener, what are the big strategic insights we can pull from this Golden Ocean story? Fredriksen's playbook, essentially.
Well, I think there are a few key ones. First, maybe sector diversification.
Yeah.
But within an industry you know well, Fredriksen wasn't just in bulkers, he's huge in tankers too. Spreading bets across related sectors, different cycles, multiplies your chances for a big win like this.
Right. Don't put all your eggs in one very specific basket.
Second, the power of active participation. He wasn't just buying stock. He stepped in with capital when the company was near collapse. He backed management, supported acquisitions, likely influenced strategy on fleet renewal and scrubbers.
So it's about being more than just a passenger. It's about helping steer the ship, literally in this case.
Exactly. Backing your investment actively, scaling it up, that can make a huge difference compared to just passively holding shares.
Okay, number 3.
Third has to be timely exit,
Yeah.
especially in these boom and bust industries. Knowing when to sell is arguably as hard, maybe harder, than knowing when to buy. Locking in that 44% premium sale to CMB Tech shows incredible discipline. Don't get greedy, take profits when the valuation is attractive, recognize the cycle is turning.
Convert paper gains into real cash before the tide goes out again. Makes sense. What else?
Fourth, don't forget the value of dividends. As we saw, Golden Ocean paid out significantly. That cash flow is a vital part of the total return equation. Don't just focus on the stock price going up.
Good point. Dividends matter. And the last one.
The fifth, and maybe the foundation for everything else, is macro insight. You absolutely have to understand the big picture drivers. China's demand, global trade flows, the supply of ships coming online or being scrapped, regulations. Deep research into these macro factors is what allows you to make informed bets on the timing, both for getting in and getting out.
So, understanding the whole ecosystem, not just the individual company.
Precisely.
It really is an amazing case study, isn't it? Golden Ocean. Classic contrarian investing. That initial bravery to commit capital when things look terrible. Then the tactical skill in managing the fleet, buying assets smartly, and finally, that perfectly timed exit to lock it all in. Nearly 5 times the money back, plus dividends.
It really highlights that old saying, doesn't it? Buy low, fix what's broken, ride the wave, and sell high. It sounds simple. Executing it consistently, that's the hard part. The discipline required, especially when emotions are running high, is immense. But clearly, the rewards can be truly transformational.
So a final thought then, maybe for you listening, how could these principles apply in your own world? Understanding the cycles in your field, maybe taking an active role rather than being passive, knowing when to pivot or exit an initiative. Is there some kind of down cycle or maybe an overlooked opportunity right where you are, where perhaps some bold but informed action could lead to really outsized results? Something to think about.
Definitely something to think about.